Hi everyone, welcome back to another video. In this video, I'm going to talk about the new tax-free First Home Savings Account, FHSA. It is a new registered plan which allows first-time home buyers to make tax-deductible contributions and non-taxable withdrawals to purchase their first home. It has the benefits of both an RRSP and TFSA. To open an FHSA, an individual must be a resident of Canada, at least 18 years of age, and must be a first-time home buyer. First-time home buyer means you or your spouse or common law partner have not owned a home in which you lived at any time during the part of the year before the FHSA is open, or at any time in the preceding 4 years. The lifetime limit on contributions is $40,000, and the annual contribution limit is $8,000. You can carry forward unused portions of your annual contribution limit up to a maximum of $8,000. Carry forward amounts do not start accumulating until after you open an FHSA. If you over-contribute to an FHSA, there is a tax on over-contributions. Qualifying withdrawals are non-taxable. A few conditions must be met. You must be a first-time home buyer at the time a withdrawal is made. You must have a written agreement to buy or build a qualifying home before October 1st of the year following the year of withdrawal. You must intend to occupy the qualifying home as principal residence within 1 year after buying or building it. Finally, a qualifying home would be a housing unit located in Canada or a share in a cooperative housing corporation that entitles the taxpayer to possess and have an equity interest in a housing unit. You can transfer from an FHSA to another FHSA, or from an FHSA to an RRSP or RRIF on a tax-free basis. The transfer would not reduce or be limited by your RRSP contribution room. However, the transfer would not reinstate your FHSA contribution limit. You can also transfer from an RRSP to an FHSA on a tax-free basis, subject to the FHSA contribution limits. However, the transfer would not be deductible and would not reinstate your RRSP contribution room. An FHSA would cease to be an FHSA after December 31st of the year in which it is the 15th anniversary of your FHSA, or you turn 71 years old. Any savings not used to purchase a qualifying home could be transferred on a tax-free basis into an RRSP or RRIF, or otherwise have to be withdrawn on a taxable basis. If you're interested in learning about how to open an FHSA or the investment options, stay tuned for my next video. Thank you so much for watching.